Okay, welcome back to the ICT Concepts Simplified series, episode 2. No nonsense, this is a quick one today. We're going to explain order blocks in a simplified manner and help you to use them as extra confluence in your trading strategy setup, especially if you're trading the ICT strategy, which I outlined in my previous video. So here it is, order blocks and how to use them. So what is an order block? An order block is a change in the state of delivery. The algorithm will often trade back to these levels before continuing in its current buy or sell program. So what does it mean by change in state of delivery? Well, as you can see to the left here, I've got an example. I actually took one of my trades off this setup on Thursday, and I used the order block. So here it is. So a change in state of delivery. Imagine price is bullish, so it's pushing up, further and further. We've got bullish market structure, and price keeps pushing further and further higher. A change in the state of delivery is these areas, as you can see, where there are down close candles, random, often singular, sometimes 1 to 2 downwards candles as we're pushing up in a bullish market move. So this is what you'd consider an order block, and this next one here would be considered one as well. And I suppose sometimes some would consider these little red candles here to be order blocks. But for the sake of this presentation, we're going to use this one here. Also because it's followed by a fair value gap, coincidentally. So order blocks provide additional confluence to support an even higher probability setup. So when you're looking at your ICT fair value gap setups, you want to see, is there an order block behind the fair value gap that can line you up for a more accurate entry? So they're not always going to happen. Oftentimes they will be there, but you can use these to confirm and give yourself higher probability that your fair value gap entry is actually going to work. So what we'll do is I'll show you on the charts now this particular order block and fair value gap and how you can use these to accurately enter a trade using the ICT fair value gap model. So we're on the chart here now, the E-mini S&P March delivery contract. This is the 3-minute chart. I generally take my trades from the 3-minute downwards. So here is where we had that order block that we marked out in the presentation, this red downward candle here in the middle of an upward push. Okay, so my trade was taken in this fair value gap and using this order block. So how do we then use this to confirm our entry? Well, what we want to do, so I actually took my trade off the 1-minute chart. So we've got that noted. Let me just highlight this order block. Okay, we mark the whole thing for now. Highlight that order block. We'll jump down to the 1-minute time frame and we will look further as to how to use this. Okay, so here it is, the 1-minute chart. Now, as you can see there, now that we're on the 1-minute chart, there are 2 downwards candles. So for order blocks, I suggest using just the bodies. Don't use the wicks of the candle, okay? So we've got the upward push. Here's the change in the state of delivery, the 2 downwards candles, consecutive candles pushing down before pushing back up again. Now, what did we say before? The algorithm will often use order blocks. They'll draw back to order blocks before continuing on the upwards trend or downwards trend, depending on the daily move. So what did price do here? It created these 2 downwards candles, pushed up further, came back down into the order block, and kept pushing up. Now, to use this in conjunction with the fair value gap strategy, here's the exact trade I took on Thursday. So, as you can see, what do we have in this push here? After this order block, what do we have? Fair value gaps. Okay, we've got one here, and we have one here. So both of those fair value gaps would have been valid entries, depending on where your stop was. Let's say for highest probability, you take the lower fair value gap. Okay, how would we further confirm this fair value gap using that order block? Well, as you can see, behind the fair value gap is the order block, and what we can use is a little trick that ICT teaches that you can validate these order blocks with, is if you grab your Fibonacci tool and you click from the top of the body to the bottom body of that order block, there is what's called the mean threshold, the 50% line of the order block. Now, look what's magical here. We have the halfway mark of that order block lines up with that fair value gap. And what happens? What happens here? Price, just like the previous slide said, price drew back to this order block before continuing for a massive push to the upside. And what did price do? Look at that. See, if you were to put your entry right here, right at the top of that fair value gap, using the 50% threshold of that order block, look at this. This candle, literally to the tick, 3990.75. 3990.75. That's exactly 50% of that order block. You'd have literally no drawdown if you entered right there. No drawdown. Everything else just boom, pushes to the upside. Okay, so keep that in mind when you're looking at order blocks. Mark out what is the 50% mark of that order block, the mean threshold. Mark that out. If price pushes below the 50% mark of the order block, then there's a higher probability that this order block is invalid and price will in fact reverse and go downwards. If it holds that 50% mean threshold, then there's a good chance that the order block is valid, and you should line it up with your fair value gap entry and use that to enter more accurately and take a more profitable trade with less risk associated with it. So that's how you use order blocks in conjunction with fair value gaps and the strategy. Next week, we'll go into some more confluences you can use along with the fair value gap, the order blocks, in order to get more accurate entries and trade better with less risk and more profit. All right, thanks for watching. And as always, I'm an official partner with TopStep, and I do trade with them with my evaluation, and I'm in the process of getting funded with them. I'm documenting that on my channel. But if you're also wanting to trade futures and get funded, I highly recommend TopStep. You get a 20% off discount if you use the link in my description or on the pinned comment, and you'll get 20% off that $165 to get started. And if you get funded, you get to keep 90% of all your profits. So I highly recommend them. Great service, great team, and they're just all around a pleasant team to deal with when you're working towards getting funded. Thanks for watching, and we'll see you next week.